Welcome to Banco de Portugal Podcast. My name is Bruno Proença and I will be your host today. We are here to discuss some of the main topics in the European financial system agenda, from the post-COVID challenge to the banking union. Today, we have a special guest with us, Andrea Enria, SSM Supervisory Board Chair. It's a great pleasure to welcome you in Lisbon. I am also very pleased to welcome back Ana Paula Serra, Banco de Portugal board member and member of the SSM Supervisory Board. Thank you so much for accepting my invitation. You both have great responsibilities on banking supervision. European banks have been very effective dealing with the COVID-19 pandemic. But what about the post-COVID era? Which is the main test European banks will face in the near future? Andrea?
Well, first, before moving to the near future, we have to get out of the pandemic, and which unfortunately is not yet over. And let's say our main focus at the moment should remain on the exit from the pandemic, on the potential materialization of credit risk still when the public support measures are withdrawn. I think we have done excellent work at the SSM jointly to follow closely this aspect, and we need to keep our attention high on this point. I'm also concerned that in the exit from the extraordinary support measures that have been deployed by monetary policy, fiscal policy in this period, there could be bumps in the financial markets, in some segments of the financial markets in particular, which are heavily leveraged and with concentration of positions in which probably there are issues of overvaluation now, and adjustments there could raise financial stability concerns. So these are, I think, in the short term, these should be the key focus for us. Then looking a little bit further into the horizon, of course, I think that digitalization and climate change and climate risk, in particular from our perspective as prudential supervisors, will become increasingly important topics. Digitalization is also a channel for putting business models on a more sustainable basis. So we need to focus these processes quite closely. Sometimes I have the impression that banks are more concerned about digitalization as a challenge maybe by non-bank fintech companies, and by climate change as a potential challenge to their current balance sheet composition. But I think they should embrace the change and take this as an opportunity also to restore their business model and grow their revenues going forward.
Paula?
Yes, I can add a little bit to that. So I think we have exactly the same concerns, these uncovered pockets of risk. In the particular case of Portugal, as we know, we just ended the public moratoria back in September, and so we are waiting to see whether what is the credit quality evaluation. It could be the case that some of the risks have not yet materialized. We know that households and firms have accumulated deposits, and that enabled them to face their obligations at least until the end of 2021. Let's see what happens in 2022. Having said that, it's all our work has been to prepare this process so that banks are now ready to move when risks materialize. Also, and only in a few cases, fortunately, some have to now copy with previously exempted capital and liquidity requirements. These were exceptions, but some of them, of course, now they still have some flexibility, but they have to start thinking about the end of 2022 and how they will copy with that. In the medium term, of course, the issues of these are not pandemic. These are pre-pandemic issues. They are all pre-pandemic issues because we had the business model, the profitability, the digitalization, and also the need to transform to finance a greener economy, and also to face those risks. In terms of the business model profitability, of course, there we can say that there has been. We see. Let me bring the issue more to Portuguese banks, and in the case of the Portuguese banks, we see a lot of improvement in terms of cost reduction. Given that they were concerned about the other side of the equation, let's say, because of low interest rates, they had what we see now in terms of cost to income in the Portuguese system is around the average of 53%. I think that's rather impressive in terms of where they started a few years ago. But they still have a lot to do. Some of them more than others, but they still have a lot to do. In terms of digitalization, I agree with Andrea. This is something that you need to embrace. Has to be part of your strategy, and part is also because it's also an opportunity. But then all the risks that come with it. What we have seen in the pandemic is an acceleration of this process.
Let me underline that topic. Digitalization poses an important challenge to the banks, business models, as you already said. But you think that the European banks are prepared to face that challenge? Ana Paula?
I think we were discussing this morning. Is like I don't think they are prepared. I think they are paving the way. Let's put it like that. That for some of them, we know digitalization has been here for a long time now, I would say. But it's true that Portuguese banks have other issues to deal with, and of course they had to concentrate on those issues like strengthening their balance sheets. But I think most of them has started to pave the way in terms of this digitalization. As I was mentioning, I think the most important issue here is not just reinforcing your IT systems or digitalization system without knowing where do we want to go, what do you want to be as an institution. So link this very directly to your business model. And then, of course, the risks, because all the risks that come with it. We know that even in the relation with clients, with customers want things to be very easy, isn't it? But then to be very easy means that sometimes your controls have to be somehow relaxed, and so you need to be very careful about that. We were discussing that the other day about how the banking industry is regarding other industries. So maybe it's better than other industries, but there's still a lot to prepare, for instance, in terms of cybersecurity.
Andrea, the same question, but about the European banks. They are prepared, but
look, at the ECB, we made a report before I joined, actually in 2017, on exactly the sustainability of bank business models, and it was clear already in that report that investments in IT systems, in IT infrastructures, and in digitalization were one of the key features of the banks that had managed to turn around their business model and become more profitable. So we gave a clear indication to banks that this was an area where they should focus their attention. To be honest with you, nothing much happened after that report, notwithstanding a number of recommendations also made by our supervisors. But I think that the pandemic could have been a sort of game changer in this area. I met several CEOs of banks that were positively surprised of how much the productivity of their bank had improved during the lockdowns, moving to digital distribution of their services, how much effective they could be in reducing costs, but also in reaching out in terms of distribution of their products and to their customers. So I think that I see that banks are now moving, as Ana Paula also said, in terms of exploiting more these opportunities. They're investing more in digital. So I think that this will be a key divider between winners and losers going forward. And if you look at the European banking sector now as a snapshot, I think we are still lagging behind. If you compare to the US banks in terms of digitalization, we are lagging behind. But I see positive movements, and it will be an element that will differentiate the performance of banks very much. The banks that stand still now are taking in this area, that are not investing, not changing their business model. They will be the riskier banks of tomorrow.
May I add to that, like the fact that, so we were mentioning that at the beginning, fintechs and the big techs move much faster, and we cannot forget that. And some of them are born digital, and so banks cannot forget about that, in the sense that there are areas where they will compete, they are competing, they will be competing more and more, and even if they are increasing the speed of transformation, they need to be aware that others are faster than they are.
Let me chase for another hot topic, climate change, and because it's also defying the banking industry. How do you evaluate the bank's response to this big question, Andrea?
Too slow. We will publish early next week a report that will summarize the outcome of our assessment in the supervisory review and evaluation process of this year. And as you may know, we issued a guide setting out our supervisory expectations, and then we asked the banks to self-assess themselves against this yardstick. And banks have been candid in the assessment. We have to recognize that and praise them for that. But the outcome is that basically no bank is actually close to fulfilling our expectations. They are now setting out plans on how to fill the gap, but I don't feel that there is the right sense of urgency in terms of movement. I see this in the attitude when I have my dialogue with the banks. They are always asking me whether there will be capital charges on climate change. And I think they don't understand that the key issue is not that one. The point is whether they are able to identify, measure, and manage this risk. And if they are able to do that, they will be themselves allocating capital to a risk which is already material now, and the capital charges or the regulatory framework will become much less relevant for them. The same in the area of data. They complain that they don't have enough data, and they would like us to be maybe less demanding in terms of information. But the key problem, again, is if there is a risk which is material already now, because we have seen all the wildfires, floods during the summer, and you don't have the data to measure and manage this risk, then you do have a problem in your risk management, and you need to develop proxies, to develop other ways of measuring and managing actively these risks. So I think that banks are still a little bit in a mindset as if these were a sort of regulatory request upon them. They should instead look at this as a risk management challenge for them, and they should bite the bullet and move faster.
No, I absolutely agree. I think there's a need for a mindset shift. So it's not just to respond to what we ask. Is truly that they understand that this is no longer a risk that will come. This is something that they have to live with, and they need to, let's say, introspect and see how that impact again their strategy. Of course. This is a learning process. This is a learning process also for supervisors, something that we are investing a lot, but they themselves need to make sure that they understand. So there's this need for these diagnostics to to understand truly how they are affected, what are the materiality of these risks. Setting the expectations, the supervisory expectations, I think it's good for them. Also, all the work that we develop with them in terms of sharing good examples, of sharing benchmarks, will help some of them, because some of them, we have to say, are a little bit giving their small steps, baby steps, in some cases baby steps, and I think they also cry for help somehow. And for instance, this data thing is that sometimes they are a little bit lost, because there are different sources. Which one should I use? All that has to do with classification, and I think this is truly important, and I think supervisors can help in this way. But having said that, that doesn't mean that they will sit and wait until things will be done by others, because they are part of this new ecosystem where we finally recognize that we need to deal with these risks.
Ana Paula already give us some figures about the Portuguese banking system, but let me pick up that issue and ask Ana Paula and Andrea. The Portuguese banking system has come a long way in the last decade, but what's your evaluation from the actual situation from the Portuguese banks?
So yes, I think that you said it, Bruno, in the sense that it has been a long way, and all the transformation since 2016, we have to recognize that banks were able to strengthen their balance sheets, to improve profitability, to increase capital ratios. And this was good that happened before the pandemic came, because this enabled them to face the pandemic crisis with a different standing. And fortunately, some of this process of adjustment was also able to be continued throughout the pandemic crisis. Of course, partially, we have always to say that partially because of all the measures, all the monetary measures, all the fiscal measures, all the flexibility from supervision measures that also help them to more smoothly deal with the crisis. Of course, as I mentioned, we don't know yet what's coming, but the outlook seems to be better than the one that we, of course, had in early or mid or end of 2020 or early 2021. I think Portuguese banks still have a lot to do in terms of credit quality, and of course now avoid the deterioration that could come with the end of the moratoria. And I think they have been prepared for that. So this proactivity that also, of course, has been a result of our pressure as supervisors will help them surely to deal with the problems, with the risks if they materialize. The profitability is not that is specific to the Portuguese banking systems. Of course, the low interest rates will also equally, I would say, or similarly hurt them. Of course, the aspect that has to do with that Andrea mentioned at the beginning. So if you feel that there will be some corrections, in financial markets, some of the Portuguese banks are still well exposed to sovereign debt, and of course that's where that risk could hurt the Portuguese system. In terms of cost to income, we know, and Bruno, you know, because that's also very well covered in the media, that they have been closing branches, they have been trying to restructure in terms of reducing staff. some issues, because of course it's always a very difficult process for people, but at the same time I think overall also the society understands the change that banks had to go through, because many of us no longer go to branches, so they don't even recall the last time they've been there. So challenges are there, and banks must capitalize on the improvement achieved so far, and also make sure that the digital transformation help them. Of course, they need to prepare all this operational resilience that needs to be built, but also at the same time trying to anticipate what are the benefits of this transformation, and how can they be winners or not, be the winners, because there will be losers, of course.
Andrea, your evaluation about the Portuguese banking system?
I very much agree with Ana Paula. If you take a snapshot at in 2014, when the banking union started, the Portuguese banking sector was, of course, heavily scarred by the downfall of the sovereign debt crisis. It was one of the less capitalized banking sector in the euro area. A huge legacy of non-performing loans, so it was really a tough challenge. And if you take the same snapshot right now, the progress has been impressive. I mean, we see that the capital ratio has converged for significant institutions, has converged quite a lot towards the euro area average. The leverage ratio is even a bit higher than the euro area average, and if you look at the progress in cleaning the balance sheets from the legacy assets, it has been also equally impressive. Now, again, for significant institutions, we are very close to the euro area, to the banking union average. So, and again, as Ana Paula said, we have to recognize, and it's not only for the Portuguese banks, but all the banks in those countries which had a strong legacy following the sovereign debt crisis have managed to continue the process of repairing, improving their asset quality, disposing, securitizing, curing non-performing loans throughout the pandemic, which is something that has been a very positive surprise, and we have to praise them for that. Of course, looking ahead, again, having focused so much on the balance sheet strengthening repair, of course, the issue of putting the business model on a more sustainable basis going forward remains a challenge. It's a challenge, honestly, as Ana Paula said, for banks across the European Union. We have, on average, the European banking sector has a return on equity well below the cost of equity, so it's burning capital. So that's a challenge for all the banks, but in Portugal, of course, it's particularly important, and action is being taken. And governance also is an important topic. Also, is another area in which the pressure from our side has been very heavy on banks across Europe. I mean, it's the area where we have most findings and recommendations to banks. So that's another area in which I think progress will be needed to put the banking sector really on a strong basis for the next challenges.
One last question. The new rules on bank capital, the final part of the Basel III agreement, were delayed because of the pandemic. The European Union has announced that only in 2025 they will come into effect. What do you think of this calendar? It's visible?
To be honest, the calendar is even a bit lax, no? With respect, I mean, the international standards, the commitment was 1st of January 2023. Of course, with the legislative process that we have at the European level, that's clearly now not feasible. So I understand that there is going to be a delay, and 2025 eventually. I mean, I've been always pushing for a timely, full and loyal implementation of the Basel reform. And that's because I really believe that it is a step forward. Sometimes it is forgotten that much of the work underlying the Basel reform is work that we have done at the European level, because we were the most advanced in using internal models, and we have identified the problems of reliability and consistency amongst banks in using internal models, and we have proposed at the Basel table reforms which are now being implemented. The banks complain that these might be have an excessive impact and impair the recovery from the pandemic. And I think that, the ECB has done analysis showing that the impact would be minimal and only in the first 2 years, and really much counterbalanced by the benefits in the longer term. And the fact that the Commission is smoothening the implementation and also lengthening the phasing in of the new requirements is in my view, in my view, even excessive sometimes. There are some increase, let's say, some lengthening of the timeline, for instance, in the phasing in of the requirements on mortgages. And we are seeing right now that mortgage markets are eating up in some member states. So I wonder whether this is the right moment to be laxer on the treatment of mortgages. But anyway, there will be a smoother transition. So I think that we just need to, again, be serious, respect our international commitments, and not only because it is imposed by an international body in Basel, but because it's good for the level playing field across our banks. These projects was actually is not impacting all the banks in the same way, is impacting more banks which have been particularly aggressive in the use of internal models. So I think it's a fair step forward to re-establish consistency and reliability of our regulatory framework.
The same. We thought the calendar was generous enough. I think there was time to comply with the new rules. But having said that, there was a pandemic, and somehow as long as these new requirements are implemented not so timely as we would expect, I think that's an important aspect. And because I truly believe that the benefits that come from compliant with international standards are good for are very good for European banks. The fact that they signal investors that the capital that they have, the capital headroom that they have can reassure investors, and that will translate into lower costs of funding and, of course, huge benefits for European banks.
Andrea Enria, Ana Paula Serra, thank you so much for this discussion. It was a pleasure to me to host this debate. For more information on the European banking system and then Portuguese banking system, check out Banco de Portugal's website. And of course, you can follow us on LinkedIn, Twitter and Instagram. Thank you so much.